All right, hey, joining us now on the Voices of Wall Street, we have Craig Abrahams. He is the president and CFO of Playtika. It's a mobile gaming company, and it just went public this year. Booming, huge $2.16 billion IPO. Craig, thanks so much for joining us.
Thanks, Dion. Great to be here. Thanks for having us.
Now, you and I talked a little bit about this before we came on the air, but I'd like you to inform our listeners. I was asking you about the pronunciation of the company. Tell me about that.
Yeah, it's interesting. We are an Israeli-based company based in Herzliya, and within Israel, it's been Playtika, but in the U.S., everyone says Playtika. And so we went with the roadshow, and in speaking with investors, we went with Playtika because it's how everyone says it here in the U.S. But it's funny in that based on folks' accents and just how it's pronounced in Israel, people do say Playtika.
Yeah. And as I said, you're a free to play mobile gaming company. You've got some of the top grossing titles in the US market. Talk to me for those who don't know or who haven't been following your huge IPO about the company and about Playtika as a public company.
Great. So Playtika is one of the largest mobile game companies in the West. We have 9 games out of the top 100 on both the iOS and Android app stores. And, we view ourselves as a mobile technology platform. We've spent the last 10 years really building out our technology. And what we have today is the Playtika Boost platform, which is what really allows us to leverage learnings and cross-pollinate those learnings across our games. Our motto as a company is infinite ways to play. We want customers to be able to play our games across any platform or any device. Today, 82% of our revenue is on mobile, 18% is on web. And we offer a variety of games across genres. We started off in 2011 focused on casino-themed games. We offered slot-type games, poker games, bingo, and have expanded into a variety of other casual genres since 2016. And we now have the #1 solitaire theme game, the #1 hidden object theme game. We're in match 3. Today, 45% of our revenue is from casual theme games, 55% from casino theme games. And as you mentioned, last year we did over $2.3 billion in revenue, $940 million in adjusted EBITDA. And so it's been a tremendous ride over the last 10 years. When I got involved with the business 10 years ago, we had just 15 employees in Herzliya, and today we have over 3,800 employees around the world. And so it's been a tremendous journey, and really excited to now be a publicly traded company here on NASDAQ.
Yeah, and obviously the debut of Roblox has caught a lot of attention. Has that been beneficial for you guys? Are you getting more interest, more questions, or is that just a completely kind of different field, a different genre from what you do, and it hasn't affected you?
I think the fact that so many more video game companies and mobile game companies are going public, it definitely helps from educating investors. And so I think that's definitely a positive, especially when there's strong companies such as Roblox going public. I think Roblox is very different in that it's more of a platform,
Right.
and it's also targeted more at kids games. Our target audience is more 35 and over, skewing more female.
35 and over.
Skewing more female for most of our games. We do operate World Series of Poker, which is about 90% male. But I think for us, what's great about the older audience that we serve is that they're very loyal and sticky customers. And if you look at our 4 oldest titles, 45% of the revenue is from people playing our games over 8 years. And so I think we're really differentiated in terms of how we deliver content to our consumers and how we engage them for very long periods of time.
Yeah, and I think what's interesting too is the revenue model that's obviously very different from you all in Roblox. But talk to me about your revenue model and how you guys are going to be able to scale and continue to grow continue to grow the company so that you're delivering for investors.
It's a great question, Dion. So we are differentiated in that 97% of our revenue is from in-app purchases, 3% from ad revenue. We believe that in-app purchases is the highest quality revenue stream you can have as a game company, because it's a testament to your customers' engagement within the games, right? They are choosing to make purchases to further, deliver on the content that they're purchasing within the game, to accelerate their progress within the game, to compete against other friends within the game. And that engagement drives much better retention over the long run. I think with advertising, we do see opportunities for customers to better engage with ads, but also when you're showing an advertisement, the ads that pay the best are ads for other games, sending your customers to other games. And so I think for us, we're looking at cross-pollinating users from one game to another and sort of advertising our own titles. to our customers. And so we're sort of evaluating and experimenting with that as we build out technology to better understand and have a 360 view of our customer. But our predominant business model today is in-app purchases.
So yeah, how do you grow that though? I mean, is it just about getting more games out there? Is it just drawing more customers to your current slate of games? What's the plan for growth? Because I feel like that's all a lot of folks in the market care about right now.
Great question. So for us, it's been driving conversion. So if you look at our business today, 2.8% of our customers pay every single day on average.
Wow.
And so if you think about that, there's 97% of our customers that aren't paying in a given day. And so that really is where the opportunity is for us to grow. And it's the healthiest way for the business to grow, right? Because you're getting customers that are engaged in your game, but they're not yet paying within the game. And so as we continue to find new ways to monetize those consumers, the business can grow. I think the other key way is as we've entered the casual game genres, those games are generally under monetized relative to the games that we operate. And so we're able to also increase monetization as well. And so not only the conversion, but the growth in the RPPU also drives revenue further. So just to give you an example, a way that we're different than most other game companies, if you look at the last 12 months, ended December 31st, 2020, in the fourth quarter, we grew 17.5% organically. That was without any new title launches. That was without any M&A. That was just the business growth as of the fourth quarter. And then we recently just flashed January numbers as part of a debt refinancing we just did 2 weeks ago, where we showed 23% year-over-year growth in January. And so I think we have a differentiated model in that we're constantly introducing new game features and content to our consumers on a continuous basis, on a daily or weekly basis, depending on the game. And that's what really drives that engagement and drives that conversion and eventually monetization.
Right. Yeah. And one last question I want to ask you on this is just about, I heard it explained to me a few years back, the Chinese model versus the American model. And the idea was the Chinese model was consumers there wanted to pay to be better at the game, right? The idea was if you were playing a fighting game, you could pay and your fighter would get the best stuff and he'd be able to beat everyone else, or she'd be able to beat everyone else. Versus in America, we like to earn it. We like to just play the game for a bunch of hours and earn it. It seems like that's shifting as more titles go to these in-app purchases. Does it seem like, is that the key, that the American model is shifting, or just that overseas you're able to do enough revenue that these in-app purchases continue to be a good revenue driver?
I think the freemium business model continues to evolve. By freemium, these games are free to play, and that right. did originate in Asia, free to play style games. Initially you had to buy your game here. And then there may be in-app purchases beyond that, but you had to pay for the game. And so that model is now maturing in that it's over 10 years old. And I think with that maturity, you have different types of players. Some players want to grind. They enjoy working every step of the way to progress in the game. And some people want to accelerate that path and do it more quickly. And that's really up to the consumer. I think it's on us to give consumers the best entertainment options we can, to give them the best experience. And every customer goes through a different experience. I think that's really what we're so good at. Live operations is what we're known for. And how do you segment different players into different groups to give them content that's really appropriate for them at the right time? And in doing that, that personalized experience really allows greater retention and engagement in our games.
Yeah. And you all have had, I think it's 7 acquisitions in the last 10 years. Now that you've gone public, and I think I saw a story, you guys have announced that you're going to release $600 million worth of debt. Talk to me a little bit about what the plans are for M&A and in general for going forward.
Absolutely. So we have a great history and track record around M&A. As you mentioned, 7 acquisitions over the last 9 years, all very successful. And I think we took a different approach going back 10 years ago, really thinking through how do you limit the hit-driven nature of the games business? And for us, it was buying great products that we can better monetize and grow. And that was a theory that we took out, did it with Buffalo Studios back in 2012, did it again with the purchase of one of Electronic Arts Studio in Montreal with World Series of Poker, and then have continued to replicate it over and over again with our Boost platform. And so today, as we look at the market, we have $1.5 billion on our balance. We have over about $1 billion in cash on our balance sheet. We have a $600 million revolver, as you mentioned, as part of the recent refinancing. So that's about $1.5 billion that we intend to put towards M&A. And obviously, the market is getting more competitive as others are also looking to grow via M&A. But I think because of our background, we have a broad variety of things that we can buy. Right? We don't just need to buy growth assets. We can buy an asset that's been stagnant and really leverage our live ops know-how to grow
Mm.
those businesses as well. So I think we're pretty
Can you,
excited about the opportunity in front of us.
yeah, can you talk about what kinds of companies might be targets for you right now?
Sure. So our focus has been on casual game companies across a variety of genres. And, we continue to extend to other new genres beyond our core. As I mentioned before, we went into board games initially in 2017 with the acquisition of Jelly Button. We then got into solitaire. We then got into hidden objects. We then got into match three. And so we continue to look for other opportunities within casual. We also look at other opportunities in other adjacent spaces, even beyond games. What we're really best at is how do you manage a game economy? How do you manage, the player segmentation? How do you manage dynamic pricing? How do you introduce content and leveraging all of our know-how around AI and analytics? And so I think all of those things can be leveraged in other categories as well. And so I think in the future, you'll even see us go beyond traditional game categories.
Oh, beyond, and what does that mean? What do you mean when you say outside traditional game categories?
So I think there's a variety of other apps that do have opportunities. There are sort of apps that look a lot more like games. They can be contests. They can be trading platforms. They can be other things where there's high levels of engagement, high velocity of transactions. And I think those are the places where, sorry, my earpiece came out. Those
Yeah,
are
no, get
the,
that in there.
those are the places where I think we can really help grow those businesses. But I think initially, the next couple of years, we're focused on games. But I think longer term, we have ambitions of going beyond games.
Okay. And last question I'll ask you, Craig. Right now, your stock has not been performing all that well. The market doesn't seem to be taking it in as well as some companies like Roblox. What is it that folks on Wall Street are missing about Playtika, and why is this stock going to turn around?
Sure. So I think we had a very strong IPO, and the business today, as we see it, is performing very well. We flashed January numbers up 23% year over year. We gave guidance to the marketplace of $920
Yeah,
million.
maybe that's your problem.
dollars.
Maybe you're making too much money, Craig. You got to stop making all that money, go unprofitable. That's what the market wants. No, I'm sorry, I'm kidding. Go
Yeah.
ahead.
Yeah, no, I mean, we guided to $920 million of adjusted EBITDA. And we're focused on building, value in the long term. We've been with this business for 10 years. We're focused on getting the business to grow, and where we're going to be in the next 5 to 10 years. And we've guided annually as that's important to us in terms of how we run the business. And quarter to quarter performance obviously is important, but we're thinking about how do we build shareholder returns over the long term. I got involved with this business when Playtika was purchased for just over $100 million back in 2011. I was involved with selling the business in 2016 for $4.4 billion. And today, we have over $11 billion market cap. And so I think our track record on execution is unparalleled in the game industry. Our track record on M&A is unparalleled in the game industry. And, I think we're just going to continue doing what we do, which is execute on live operations.
All right, sticking to the script. No changes expected in the near term?
We always like to surprise to the upside, so you never know what might come from us, but we'll just keep doing what we do.
All right. Craig Abrahams, President and CFO of Playtika. Thanks so much for being with us on the Voices of Wall Street.
Thanks, Deanne, for having us.